What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So another week and another crypto-focused video, but before we get into today's content, I have a couple of announcements. Number one, I'm going on vacation next week, and as a result, I'll be taking a small break from posting. The next video will drop on Sunday, July 9th. And number two, by the time I come back, Q2 will be over. The July 9th video will therefore be my Q2 full transparency update on my portfolio. I'll cover current holdings and the why behind what was bought or sold. You can always catch the Q1 full transparency update here if you're new to the channel or simply want a refresher ahead of the Q2 review. Okay, so let's move on. Now, I know I've made this point before, and that is if you wait for the all clear message from fund managers, economists, the financial media, and whoever we consider to be experts when it comes to the stock market and crypto, you will more than likely be trying to catch the train after it has departed the station. Case in point, Neo over the past month is up 64.59%. I've been beating the drum on this one for a while on taking advantage of the weakness while you can. Also, Polygon this week alone gained 78.92%. I mean, these are massive numbers, right? And that was on the back of some big news around carbon neutrality for its proof-of-stake blockchain and privacy improvements for DAOs. Overall, the stock market had one of its best week in quite some time, right? And crypto is also not being left behind. And so the question really becomes, is this a head fake or is the recovery really underway? That's the focus of today's video. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. That said, I do recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. All right, so let me start by saying there is no grandmaster prize for timing the bottom perfectly, and you won't know if it was indeed the bottom or a bottom until months later anyways. So for me, it's more important to try and figure out if there are signs that the downtrend or uptrend is reversing, depending on where we are in the cycle. I, of course, believe that the downtrend is reversing and we are starting to build momentum. Now, this doesn't mean that we can't see Bitcoin sub 20K again at some point in Q3. I'm simply saying that from these levels, dips will be bought and accumulation is now ongoing in the top crypto and DeFi protocols. Basically, we're more likely to make higher lows than lower lows with each major drop. The reason Polygon was able to make such a massive move this week is because for the past 6 weeks, whales had been accumulating. So what are some of the signs that are catching my attention and making me feel good about putting money to work, besides the fact that everything hasn't been this cheap in the last 2 years? Well, number one, the first crypto bailout went into effect this week. Sam Bankman-Fried, one of the youngest self-made billionaires in the world and CEO of crypto exchange FTX, just bailed out crypto lenders Voyager and BlockFi. A $250 million revolving line of credit went to BlockFi, and Voyager received a $200 million credit line and 15,000 Bitcoins, or roughly $300 million. In totality, Sam spent $750 million, right, to keep competitors from potentially going bankrupt. The reason for this, quoting his words, and I quote, "Even if we weren't the one who caused it or weren't involved in it, I think that's what's healthy for the ecosystem, and I want to do what I can to help it grow and thrive." End of quote. The loans are good through 2024. Yes, a few companies get in over their heads, and this crash is exposing weaknesses, but on the flip side, it's also showing that the space has matured significantly over the past decade. It is therefore more important to prevent a systematic breakdown that would set everything back. Key players like FTX are stepping in where needed, and of course, strengthening their own positions as a result. But it's not just crypto-native companies that are looking for a great deal on crypto. With increasing reports that Celsius may be filing for bankruptcy, it was reported this week that Goldman Sachs is seeking $2 billion. I mean, that's not chump change. $2 billion in commitments from investors to buy their distressed assets at a steep discount. Why? Because as discussed in last week's video, link here, the top cryptocurrencies and blockchain technology isn't going anywhere, right? The more they can accumulate today at a cheaper price, the higher the returns in the coming years. It's basic math. You've of course heard me say that before, but more importantly, I know for a fact that the Bank of England Deputy Director does not watch my channel or follow me on Twitter. But here's what he had to say this week, and I quote, The analogy for me is the dot-com boom when 5 trillions was wiped off value. A lot of companies went, but the technology didn't go away. Those that survived, the Amazon and eBays, turned out to be the dominant players. And in the end, in his view, no matter what happens to cryptocurrency in the coming months, he expects crypto technology and finance to continue. He believes it has the possibility of huge efficiencies and changes in market structure. End of quote. That, in my view, is a massive vote of confidence and a shift in the narrative. That belief in the future size and relevance of the crypto market is why Charles Hoskinson, founder of Cardano, was invited to testify in front of the US Congress Finance Committee as they seek input into the best way to help regulate the industry effectively. Additionally, the heads of the two most powerful central banks in the world, so the US and Europe, also independently were making similar points for the need of regulation sooner rather than later, given the speed at which the industry is moving. Not to mention that elected officials who are paying attention are recognizing this fact as well. US Congressman Jim Himes was quoted saying this week, "The longer the United States government waits to embrace this innovation, the further we fall behind both foreign governments and the private sector." End of quote. The reality is, as it stands, the private sector isn't waiting around and the big four consulting firms are moving at breakneck speed to get their clients set up for the new age. Deloitte announced earlier this week on Monday a new partnership with NYDIG, the goal being to help companies of all sizes implement digital assets. For those of you who are not familiar with Deloitte, they provide a slew of services including consulting, and they advise some of the biggest companies in the world. The top 10 customers for Deloitte include Warren Buffett, Berkshire Hathaway, GM, Microsoft, investment bank Morgan Stanley, just to name a few, right? I mean, this list contains companies that are shaping the way our society evolves, right? And so the reason they're kicking things into high gear, and I quote, according to them, global financial institutions and banks have been facing an increasing demand to provide trusted exposure to Bitcoin. Keyword here, trusted exposure to Bitcoin. The alliance between Deloitte and NYDIG aims to help accelerate adoption while ensuring compliance. End of quote. But more importantly, what better time is there to accumulate and get your clients set up than after a major price dump when everything is on sale, right? There are none. There's no better time than now. That's why they're doing it. And so the last quote I'll share with you from the Deloitte press release is this. We take a longer view and expect that many companies will continue to build out their own digital asset infrastructure and products. End of quote. Now, as cool as all that sounds, possibly the biggest critic from ESG-minded investors to Bitcoin specifically, and to some extent the rest of the crypto market, was around how they fulfill ESG or environmental, social, and governance criteria. By design, cryptocurrencies run on open ledger blockchains, meaning they are transparent, and are permissionless, meaning anyone can participate. So the social and governance aspect are pretty much covered and not usually heavily debated. The environmental aspect, however, has historically been what people have cited as a concern for Bitcoin and other proof-of-work protocols. Well, a new research published on June 16th found that the banking sector utilizes 56 times more energy than the Bitcoin ecosystem. This conclusion was reached as a culmination of 4 years of research. The research lead was quoted saying, and I quote, Bitcoin Lightning and Bitcoin in general are really great and very efficient technology solutions that deserve to be adopted on a large scale. This invention is brilliant enough, efficient enough, and powerful enough to get mass adoption. End of quote. So the bottom line is this. Yes, there may be a bit more downside to Bitcoin, Ethereum, Polygon, and Cardano. Those are hands down my biggest conviction plays. That said, the narrative around Bitcoin and by association the crypto space is decisively shifting and in a positive way. But you can only realize this if you focus less on a price action as a measure of the health of the space and instead become laser focused on utility, who's adopting the technology, and why. Signs are everywhere, and with each passing day, more is coming to light to support this view. Now, remember that what markets dislike the most isn't bad news, right? But simply the uncertainty that comes with not knowing which way a specific major event will unfold. Speaking purely from an investment point of view, it doesn't matter if the Fed slaps on another 50 versus 75 percentage point increase mid-July for the new Fed funds rate. It doesn't matter if we officially go into a recession on July 30th or just barely avoid it. It doesn't even actually matter whether it's a red or a blue wave for the US midterm elections. These are short to midterm headwinds that investors will adjust to, as they always do, by rebalancing portfolios. most are already focused on next year and beyond anyways, right? When it comes to crypto, both sides of the house support the adoption generally speaking. The shift in the narrative has already taken place. The infrastructure build-out is now accelerating to take full advantage of this crypto winter and usher in a new, more efficient financial system as we come out on the other side. Neither institutions or retail investors who have a longer-term view are waiting to see where the bottom is. They're not waiting for the next potential big drop, especially when you consider that today's prices are pretty attractive by all measures, right? So that's precisely why DCA is your friend, and the number of Bitcoin wallets with at least one Bitcoin has increased by 13,091 in just 7 days. Literally these past 7 days. Ultimately, I don't know who needs to hear this, but stop trying to time the bottom perfectly or you'll miss out completely. But on that note, I'll leave it here for today. Don't forget to drop this video a like if it helped you gain a new perspective or simply reinforced your own views. Share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. As a reminder, I will not post next Sunday as I will be on vacation. That said, you can keep up with all the interesting news I come across, including NFT related news, by following me on Twitter. For those of you who celebrate the 4th of July, I know it's a little early, but hope you all have a great time. Stay safe. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.